Hello, and welcome to the first video on my YouTube channel. The purpose of this channel is to test and analyze various aspects of forex trading and to display the results for everyone to see. More specifically, we're going to look at things like indicators, risk management strategies, and even whole trading systems. We're going to kick it off with perhaps the most popular indicator, the Relative Strength Index, or the RSI, if you will. In this video, you'll not only see a thorough test that spans all of the 28 major pairs and multiple different timeframes, but I've also built two algorithms that uses the RSI, one of which I will personally forward test on the demo account. I will show both how they work and how they have performed in the past. So first off, we're going to look at the two different entries I have tested, then we're going to look at the results of the test, and then we're going to look at the algorithms toward the end of the video. Let's get started. Okay, let's look at the two different ways you can enter the market using this indicator. The first way, which I will refer to as entry 1, happens when the line crosses the lower level from above and down. This would be a buy signal. When the signal crosses the upper level from below and up, it's a sell signal. The second way, which I will refer to as entry 2, happens when the line crosses the lower level from below and up. Again, this is a buy signal, and the sell signal occurs when the line crosses the upper level from above and down. I can tell you right now that there can be a significant difference between these two ways of entering. I will also be using a stop loss and a take profit. It will be a 1-to-1 risk-reward ratio, and it will be calculated using the ATR. The formula for this calculation should be on the screen. In this next part, we're going to look at exactly how I'm going to test this indicator. As I said in the beginning, it will cover all of the 28 major pairs, multiple different sessions, and multiple different time frames. The time frames are the daily, the 4-hourly, the hourly, the 15-minute, and the 5-minute. Each time frame except for the daily and the 4-hourly will be divided into 4 sessions. The EU session, the US session, the Asian session, and a 24-hour session. Both entries will be tested. Now, if this is going to be a thorough test, we're going to need a big sample size. Not only that, but it's also got to be performed across a relatively significant amount of time. On the daily time frame, we will go back 15 years. On the 4-hourly, we will go back 10 years. On the hourly, we will go back 6 years. On the 15-minute, we will go back 3 years. And on the 5-minute, we will go back 2 years. I am not insane enough to do this manually, so I'm going to use an expert advisor to try and automate as much of the testing process as possible. I will then put the results into a spreadsheet, which will be available in the description below. Let's take a look at the results, shall we? I'll try to be brief and only highlight the most interesting findings. Based on average win rates, it seems like the hourly time frame is the best and the 5-minute is the worst. Still, the hourly time frame only had an average win rate of 48.88% during the 24-hour session. It did, however, have an average of 51.11% win rate during the Asian session, and if you take the top 5 best performing pairs, you get an average of 57.35%. Not bad. On every time frame, except the daily, entry 1 is outperforming entry 2, especially on the lower time frames like the 15-minute and the 5-minute. Across all time frames, the Asian session seems to be the best and the EU session seems to be the worst. As I said, the spreadsheet is available in the description and you can check out the rest for yourself. My goal with this video was to show you how the RSI really performs in the forex market, and as you can see, it's not that useful. This does not mean it's completely useless, however, since I did manage to create two algorithms using this indicator. Before I show you these algorithms, I need you to be aware of a few things first. The results I'm about to show you are really good and you might feel tempted to put this up on your charts and start trading right away. Please don't do this. These results are historical and there's a great chance it might not work in the future. So make sure to do your own backtests as well as a solid forward test on the demo account before you risk any real money. I am not responsible for any money you might lose. Things might get a bit advanced and confusing here, but I will do my best to explain how these algorithms trade. So the first algorithm trades during the Asian session on the hourly time frame. It consists of no more than 3 components. These components are the RSI, one fast ATR and one slow ATR. The ATRs operate on the daily time frame. If the value of the fast ATR is greater than the value of the slow ATR, it's giving the green light to trade. This is actually one of the most powerful ways to filter volatility that I have found, and you can use this concept on all time frames. If the ATRs are giving the green light to trade, we move down to the hourly time frame and we are only trading during the Asian session. At this point, we are simply looking for RSI signals to enter the market. I should also mention that we are using entry number 1 as well as a take profit and stop loss, which are calculated using a standard period ATR. More specifically, 2 times the ATR. The indicator settings should be on the screen right now as well as in the spreadsheet. Let's take a quick look at the algorithm's performance. These results are based off a $10,000 account and it risks 2% on every trade. The algorithm was tested from 2015 to the middle of 2021. Currently on the screen, you'll see the profit curve of the algorithm. It actually peaked at around $29,000 or 190%, then it fell back to around $21,700. It took 708 trades with a win rate of 55.23%, and max drawdown was 29%. 117% gain and 29% drawdown in 6 years? Not bad at all. The second algorithm is actually the same algorithm, but is trading on the daily time frame instead. Keep in mind that this is not the second of the 2 algorithms I mentioned in the beginning, so let's call this algorithm number 1.5. There is one more after this one. This algorithm was tested from 2010 to the middle of 2021 and returned a decent 84.68%. It took 369 trades and had a win rate of 56.1%. Max drawdown was 16.5%. Okay, this next and final one really surprised me. I will personally forward test this on a demo account and there is no reason why you shouldn't either. I will go into a bit more detail on how to forward test it towards the end of the video, but first, let's take a look at this algorithm. This one might be a little bit confusing, so bear with me. It trades on the daily time frame and uses the ATR to calculate stop loss and take profit, same as the previous algorithms. It consists of 3 parts, 1 entry condition and 2 filters. The entry condition is as follows: 2 RSIs, 1 fast and 1 slow. When the value of the fast RSI is below the value of the slow RSI, it's a buy signal. When the value of the fast RSI is above the value of the slow RSI, it's a sell signal. And then there are the 2 filters. The first filter consists of 2 ATRs, just like the previous algorithms. When the fast ATR is above the slow ATR, it's giving the green light to trade both long and short. The second filter consists of 2 simple moving averages, 1 fast and 1 slow. When the fast moving average is below the slow moving average, you're only allowed to take long positions. When the fast moving average is above the slow moving average, you're only allowed to take short positions. Let's take a look at how this strategy performed in the last 10 years. From 2010 to the middle of 2021, the algorithm returned a stellar 363.62%. Max drawdown was 32% and win rate was 55.53%. This is absolutely phenomenal. For contrast, the S&P 500 returned about 287% since then. Okay, so what is my approach to forward testing this and how do I decide if I'm going to trade it with real money? We're going to need a good sample size. A quick calculation will tell us that we can expect 0.4 trades per day or 2 to 3 trades per week. We arrive at this conclusion by taking the total amount of trades and dividing them by the approximate amount of working days since 2010. We want at least 50 trades, but more is always better, so I suggest a minimum of 6 months. The pairs we will trade are available in the spreadsheet, but it should also pop up on the screen. If you are forward testing this manually, you should show up about an hour before the daily candle closes. This is because spreads go up significantly around the closing time and don't come down again for 1 to 2 hours. It's important to take every trade the system gives you. Do not interfere at all. Write every trade down in a spreadsheet. Here you will track wins, losses, which pairs you traded, and dates for entries and exits. Okay, so you've tested the algorithm for 6 months. How do you decide if you're going to trade it with real money? We can use the backtest as a reference here. What is the max drawdown? What's the average win rate? Keep in mind that win rates fluctuates all the time, so we should be looking for a range and not a specific set in stone win rate. The average win rate in the backtest was 55.53%, but we can also see that the algorithm has traded sideways for a little while, which means that the recent win rate is lower than the average. Personally, I want to see at least a win rate above 51%. And what about drawdown? In the backtest, max drawdown was 32%. It took roughly 150 trades to reach this drawdown. We are only looking for around 50 trades in our forward test. My point here is that 32% drawdown in 50 trades is highly unlikely with this system. So the max drawdown we should tolerate in the forward test should be significantly lower than 32%. I will accept about half. 15% is my max drawdown. So, to recap. At the end of the 6-month forward test, I want to see at least a 51% win rate and less than 15% max drawdown. If the results are either slightly worse or close to hitting these parameters, I might give it another few months to see if it picks back up again. If not, I'm simply going to move on. So, is the RSI any good? It depends. On its own, it performs really poorly, but on the right pairs, during the right session, on the right time frame, and as a part of a more complete system, it might do wonders. That being said, there are better indicators out there, and I aim to test as many as possible. If you have any questions or feedback of any kind, feel free to leave it down below in the comment section, and I will do my best to answer it. I will upload one video each week with one new indicator, and I will start with the most popular ones and eventually move on to lesser known and more obscure indicators. Stay tuned.